Okay, let's talk about the cash that's probably just sitting in your checking or savings account right now. Is it actually doing anything for you, or is it, well, just sitting there? Today, we're going to dive into a strategy to put that money to work. We're going to build your very own yield shield. I want you to just look at this number for a second. 0.01%. Yeah, for so many of us with a traditional bank account, this is the reality. This is what our hard-earned money is making in interest. It's basically nothing. So does this look familiar? Be honest. If you've got your money parked in one of the big traditional banks, the answer is almost definitely yes. And let's be real, in today's world, that's just not going to cut it. So here's our game plan. First, we're going to really unpack the cost of that tiny 0.01%. Then I'll introduce you to this whole yield shield strategy. We'll talk about your first and honestly easiest line of defense, then explore some more advanced options, and finally, we'll figure out which shield is the perfect fit for you. Okay, so let's dive right into the problem. Because that tiny little percentage, it isn't just a number on a screen. It represents a real actual cost, the high cost of doing absolutely nothing with your cash. And this really puts it in perspective, doesn't it? Let's say you have $10,000. In a traditional savings account, after a whole year, you might have earned $1. Yeah, a single dollar. But with a high yield option, you could be looking at over $500. That's not pocket change. That's a huge difference. That's the core of the 0.01% problem. So the big question is, how do we fix this? How do we capture that difference and get our cash to stop being so lazy? Well, it's time we talk about the solution, a simple but really powerful idea I'm calling the yield shield. Now, don't let the name intimidate you. The yield shield isn't some crazy high-risk investment strategy. It's actually the opposite. It's a defensive move. It's all about using really simple, really safe tools to protect your cash and make it generate some actual, meaningful income for you, something your standard bank account just isn't designed to do. All right, ready to build your first line of defense? This is, hands down, the easiest and most powerful upgrade you can make for your cash right now. Let's talk about the high yield savings account, or as you'll hear it called, an HYSA. So what exactly is an HYSA? Well, think of it like a supercharged savings account. They're almost always online, which means they don't have the costs of running physical branches, and they pass those savings on to you in the form of way, way higher interest rates. And here's the crucial part. They are typically FDIC insured. That means they have the same government-backed safety as your regular bank. Plus, your money is still easy to get to when you need it. And you might be thinking, this sounds complicated, but it's not. It is so easy. Seriously, it's just 3 steps. You hop online and compare rates, you fill out a quick application that takes like 5 minutes, and then you just link your old bank account to move the money over. You could literally do the whole thing during a coffee break. Okay, so a high-yield savings account is an amazing first step. For a lot of people, that's all you'll ever need. But what if you want to level up? If you want to get a little more sophisticated with your cash strategy, it's time to explore some advanced shields. So beyond the HYSA, there are a few other players in this game. The main ones you should know about are money market funds, Treasury Bills, or T-bills for short, and short-term bond ETFs. All of them are designed to do a similar thing, get you a solid yield on your safe, short-term cash. First up, money market funds. Now, this isn't a bank account, it's actually a type of super low-risk investment fund that you'd get through a brokerage. Its whole goal is to be incredibly stable, to keep its value at $1 while paying out a really competitive yield. It's another fantastic place to park cash you want to keep safe. Next, we've got T-bills. Look, if safety is your absolute #1 non-negotiable priority, this is it. When you buy a T-bill, you are literally lending money to the US government. It doesn't get safer than that. You can buy them through a brokerage or directly from the Treasury. And a nice little bonus, the interest you earn is usually exempt from state and local taxes. Okay, so we've talked about HYSAs, money market funds, and T-bills. That brings us to the most important question of all. Which one of these shields is the right fit for your money? Let's break it down with this table. As you can see, all of them have high yield potential. Where they differ is ease of access, or liquidity, and risk. HYSAs are at the top for ease of access. It's just like a regular savings account. Money market funds are also highly liquid. T-bills are a little lower, since your money is tied up for a specific term, like a few weeks or months. But the trade-off is that they have the absolute lowest risk level you can find, period. You know, this quote just nails it.
It's not about getting rid of your checking account. You need one of those. But the big mistake is letting huge balances just sit there, idle, earning absolutely nothing for you day after day.
All right, let's wrap this up. What are the big things to remember? Number one, your old school bank account is probably costing you hundreds of dollars every year. Number two, the yield shield is your simple strategy to fight back. Number three, an HYSA is the easiest, safest, and most powerful first step you can take. And finally, you can pick the right tool for you just by balancing yield, access, and risk. So look, at the end of the day, it's pretty simple. You now have the tools and the know-how to make your money work so much harder for you and to do it safely. The only question left is, what are you waiting for?